Time. I'm your host, Chris Vecchio in New York, Dylan Radigan in Milan, and Nick Batista in Chicago. Ilya Spivak's out this week, so we'll have a rotating cast of guests here to fill the third spot. Welcome to the show. Thanks for joining us. If you're on the platform, Tasty Trade, if you're on the website, tastylive.com, come over to YouTube. Tell us what you think of this action. This late day sell-off in stocks, in bonds. It was all working out a little too easy and well this morning when the NASDAQ ripped to a new high. Treasury Secretary Scott Bessent told us that the August 1st deadline doesn't really matter. But the market today is, well, the day where we have low volume, low volatility, positive technical drift. We do poke up to a new fresh all-time high in ES and NQ before a late day sell-off reels things back in. Bonds do settle to the upside after, again, a late day sell-off peels us back from the highs, I should say. Gold and silver hold on to their strength. Silver up a healthy 2% right now, up over $39 once again. Gold likewise potentially breaking out. Nat gas collapses today, and we have a slew of movements in the FX market, which are really grinding my gears. But before we get there, Nick, you're new to the show. Welcome for this week. Talk to me about this market here, my friend. You and I were both playing for the upside. I got out a little bit earlier. You think this thing's going to run still? Why do I have paper hands and you don't?
I don't know if we have the same sort of velocity to the upside that we've seen. I think, I think it's hard just generally to be short into the Mag 7 tech earnings. I just don't see a realm where there's anything to be concerned about with those earnings. And so, I think that a lot of them have had their run up when you look at a Microsoft or NVIDIA, obviously, where you've had these just, V bottoms totally to the top, if not beyond previous highs. It feels like, at least for the next couple weeks as we digest these earnings, the downside is kind of capped. And I think the upside is capped a little bit too. And that's why I think I lean inside up on these earnings. And once we get through this earnings, I think the catalysts for more upside become lesser and lesser. And that's when we could see a little bit of weakness. So maybe a couple weeks, that's when we can get some sort of pullback. But I just don't see the markets rolling over with all these big name tech earnings. And I just don't see them coming in, with any sort of surprise.
Dylan, it's another day and another few dollars to the upside while we don't close at the exact highs. Still another 0.5% for the NASDAQ, 23,342. Does this thing still have legs?
Yeah, I think that it does. I agree with Nick. I think that basically, we kind of took the inflation scare and the beak last week, I guess it was it last week with the CPI or 2 weeks ago, CPI, PPI,
sure,
and sort of dealt with that. And then, the market sort of has no short-term memory. I totally agree with Nick that the earnings are going to drive the sort of short-term action and that the earnings are going to be great, relatively speaking. I think the economy is remarkably strong. I do think inflation is a real risk, just to put in my 2 cents on Ilya's behalf. So I don't think that inflation is a non-factor, but I do think that that it is not a relevant factor to the price action right now. I think that the earnings momentum is the relevant factor. And I do also think, I joke about the dollar, but I think that the dollar weakness is actually an asset as well, both in terms of some of the export drive on these U.S. multinationals, and then also on, sort of the crypto front and all the rest of that. So, obviously we came off of the dollar lows there, but not by much, and it's already kind of started to roll over a little bit. So I just think that between the momentum that the weak dollar provides for things like Bitcoin, combined with the earnings that the weaker dollar drives in terms of the export for some of these big multinationals, and I think that the fact that the inflation numbers are considered to be immaterial at this point, at least for the week or two, is all reasons why equities go higher, crypto goes higher, and having a good idea about why things shouldn't be the way they are is the surest way to lose money.
You guys mentioned these tech earnings. I think providing some context around the earnings picture thus far would be useful. I don't have this information as of today, but coming into this week, we did have, according to FactSet, 12% of the companies in the S&P 500 having reported their actual results for Q2 2025 to date. Of those companies, here's the silver lining. 83% have reported actual EPS above estimates, which is above the 5-year average of 78%. This is where the cloud gets a little bit darker. Companies are reporting earnings that are 7.9% above estimates, which is below the 5-year average of 9.1%. And further to this point, the blended earnings growth rate, which is combining the actual results for companies that have reported and estimated results for companies that have yet to report, that's currently sitting at 5.6%, which it seems good, it's positive. But if 5.6% is the actual growth rate for the quarter, it will mark the lowest earnings growth rate reported by the S&P 500 since Q4 2023. So things are good, maybe decelerating in a certain sense. And this is also Q2. This is the tariff quarter, right? Like April and May. I don't know if the market's going to penalize companies for having some volatility in their Q2 figures, given what was injected into the market, broadly speaking.
Yeah.
Right. But
those stocks don't matter either. It's not the Mag 7s. Come on. I don't care about those other 10, 20, 30 names. It's Apple. It's Microsoft.
Well, these companies are making money. They're making a ton of money right now. Yeah. 83% of the companies that have reported actual revenues above estimates, which is above the 5-year average of 70%. So there's some things to like. There's some things to raise your eyebrow about. Verizon gave us some decent numbers today, which helped get the market going this morning. Dylan, I suppose in fairness to our fair Soviet friend who is not with us at this time, he's alive still. I just realized how that sounded, which actually... I burn sensitive documents now and again, like old medical bills and whatnot, I don't trust the shredding. And so I described it yesterday to someone as burning trash. And that got a lot. That was like, that's not what I was doing. I was not burning trash in my yard. Okay. I was destroying sensitive documents in my fireplace. So wording matters. Words have meaning. Okay. So in fairness to Ilya, this is what he might say for the bears out there who don't think that I give bears a fair shot. We had a relative local high near 63.55.
Are there any left, by the way? I mean, I'm sorry to cut you off. Are there bears left? Have they survived this?
Ilya claims he's comfortably short, which I don't know what it means. That means at all-time highs. He would say here, which to his credit, right, you had a market that tried to break out above 63.55 or so, immediately rejected and pulled back in. Breakout failed. You see this in the NASDAQ as well, where we try to break out to a new swing high, although the NASDAQ doesn't quite give it up. So I would contend with him that this market still looks pretty good after this engulfing bar. Either way, though, it's a low volume, low start to the week. Nick, before we go deeper into other issues, I do want to touch on the earnings that are due out. I flagged a few that I think are interesting in terms of companies with large market caps. Mm-hmm. Maybe you have a better perspective on this, but for Tuesday, coming up tomorrow, Coca-Cola, Philip Morris, Raytheon, Wednesday, Google, Tesla, IBM, Thursday, Honeywell, Union Pacific, and Blackstone. You've been talking a lot about these tech earnings here, so I'm assuming you're laser focused on Google, Tesla, and to a lesser extent, IBM for their AI products later this week.
Yeah, I mean, I think Google has been kind of my catch-up trade. It's been an absolute pig for the better part of, the rally that we've had and is now kind of catching up. I think there's more upside in a Google/Apple in just the news not being as bad as what has been priced into the stock. So I think there's more upside in those sort of names relative to a Microsoft or an NVIDIA, where I think, as you said, they're kind of priced for perfection, or at least it seems like they are, or at least priced for as good a earnings report as you could get. So these are the names I'm looking at. I think Tesla is a goofy one. I mean, it's obviously just moving on, or has been moving back and forth on whatever is happening with Elon. And I think that, the fundamentals of it obviously don't matter. So that one's the one that I have the most uncertainty of. But I think generally playing it to the upside is the asymmetric bet. I mean, that's just how Tesla trades. And that's how I typically trade it, is upside.
Put spreads?
You could sell put spreads. You could do diagonal spreads, even like trading calendar spreads or stuff like that, where you kind of play into the upside call skew that you typically have here. I mean, that's the sort of trade that I play here. But put spreads are definitely the more conservative way to play for it.
I like the tech. I mean, I like being long the tech names going into earnings, honestly. I mean, I guess the tasty trade thing the tasty trade way would really be obviously to do a condor or something before the earnings and then just let the vol come out. But directionally, I like the put spread as a sort of halfway between a condor and a naked call, I guess.
You bring up Google, if only to wave a flag here a little bit. Dylan, back in April, a little over 3 months ago, we were given an assignment by our editors here on the desk, and we were asked to, what did you like before the market sell-off? What do you still like now, right? And we on April 9th and April 10th talked a little bit about Google and Meta, the clear-eyed case for Meta and Alphabet, given some of their cash flows and the way that their earnings have shaped up. I don't know if we can make that case anymore for Meta. Meta right now has a forward PE ratio of 27. That's very different than the 20.4. It's no longer below the 23.5 5-year average. Google's a different story. Google's forward PE is now north of 19, and that's still below the forward PE ratio of 21.5 over the last few years. So if I'm thinking about this market now and how it's behaving, I mean, Nick, Google would probably be the one company that I feel like has some catch up still to go, considering it really has not had the year that a Microsoft has had or a Meta has had. And, it didn't have the AI rollout that many people thought it would, and its business model, Google Search, being pressured by all these new chat tools. I'll be honest, I don't ever use Google Search anymore.
Really?
I only use ChatGPT now. And
same for me. GPT is the new Google.
It really is. The kids call it prompting. That's what I've been heard. That's what I've been told.
We do call it prompting. I'm still not.
You're part of that, Vecchio. You are.
Yeah.
Okay.
Yeah. 30. Again, my daughter's like, "Oh, you're so old now. I see all this gray." She keeps pointing out gray hairs on me and saying that like you're gonna die. It's like I got it. Right. I don't need that. Don't need that stress. Live. Thank you.
Our new intern has been just dogging me for the last 2 or 3 weeks about how old I am. He was like, "Man, I thought you guys were young." Come on, man. Respect your elders here, all right? Don't just straight up call me old.
So you have a Google that's really that was the threat. These GPTs, LLMs are going to displace Google search, but Google's been able to reinvent itself, and it's AI now, as we've looked on Polymarket previously, with the AI analytics platform that we found on Twitter, artificial analysis. They rank Google's AI very, very high right now, Gemini. So it has a nice bit of a pop here going into the earnings, 2.72%. Do you guys kind of feel about Google the way that I feel about silver, which is to say that the other tech names had a big run earlier this year, like gold did? And now it's really these laggards. It's their turn to play catch up. Dylan?
Yeah, I do. I absolutely think that the tech names are set up for a mad dog run. I think that, that everything that's happened in the first half of this year was greatly disruptive to a lot of perspective for very good reasons. But I think that a mad dog run is teeing up here. And I think that kind of right about now is the time. Of all the names, I mean, I still always kind of come back to Meta because I like Meta as an AI play, as well as also a sort of the dominant advertising play. I don't Google as well, but Meta always ends up being kind of my default favorite, as well as I tend to be more comfortable with the Tesla situation, even though it trades based on the abstraction of Elon Musk and the promise of an uncertain future and all those things. But I just think that that's actually sometimes the less information you have, the more valuable something becomes. Like the details of information actually can frequently reduce the value because it becomes so concrete. And so for me, yes, I like the overall situation, but more than that, I really like Meta and Tesla of the Mag 7. I wish I could say I liked Apple because I really do think Apple should be more dominant than they are, but I feel like they've had a hard time kind of really getting into gear in a way that is consequential.
I saw some headline today. The flip, the sandwich phone is the next big idea for Apple.
I mean, back to 1999, Back to the Future.
Like Samsung has the or is it the one of the Google?
Oh, the folding screen. You're saying
the folding screen? Yeah. I mean, if that's the best they got, that's a tough.
I mean, that's a sad state of affairs, in my opinion. If the best they've got is a folding screen.
Apple's still being punished for not having AI. They don't have functional AI.
I was just going to say they should have a dominant. They should be. Siri should have put them in the driver's seat for AI, in my opinion.
Mm-hmm.
Skype losing out to Zoom and Siri losing out to ChatGPT are probably two of the bigger fumbles in terms of having lead time within a particular industry, having like a dominant, frontier market position, and then just absolutely losing it through sheer mismanagement and poor decision making. Skype doesn't even exist anymore, which is wild.
Yeah. Didn't they just shut it down like a month ago or something? Was it Microsoft that bought it? Who bought it?
It's so crazy. So LeBron James gets drafted and starts playing, and then Skype premieres. And Skype is now shut down while LeBron James is still playing. Like he outlived that entire service, which is like, I didn't think I'd outlive an internet technology, which is a fun transition because we're going to talk about an internet technology. Do you like buying homes algorithmically? Do you like having a team of human meat bags go in there and fix them up and then sell them to someone else at a profit? Apparently, a lot of other people do, too. Open Door Technologies, based out of San Francisco, came into this week with a short float of 22%. So there's a retail trader gamma squeeze going on here, led by someone who I actually like and follow on Twitter and have for years, Eric Jackson. He was a guy who called out Carvana a while back before it had its big run up. So he has some accolades. If he's not a kitty, he does certainly make the market purr. Okay, we're not going to go into that direction, Nick, but we are going to say that this feels a lot like GME and AMC from years yonder, January 21. Can you talk through what's happening here? Like what a gamma squeeze is, remind people. This really feels like a topic we haven't had to cover in some time.
Yeah, it's underneath the surface, basically the amount of options that get bought, particularly to the upside, causes a squeeze because there's a shortage of shares, or the shares are hard to borrow, or there's a cost to borrow those shares. And so it's kind of like a cascading event of, the more option flow comes in, which means that, the stock moves higher and the borrow rate relative to the price of the stock gets more expensive, and whoever is short the stock is typically having to buy back those shares. And when you're buying, obviously price goes up. It's kind of a everything upside type flow, and it comes furiously within days, hours, minutes, whatever it is. Today, I mean, if you look at open interest or volume on the options, I mean, they're astronomical, which is
1.84 billion.
Yeah, is it just, and that's all like changing hands, and, that's not just one side. So, that's obviously just trading back and forth. But yeah, I mean, these things, they capture our imagination, and they just it's almost deja vu, right? I mean, they're not unique. They happen from time to time, and they're usually short-lived. The GME and AMC have been far longer time horizons, but yeah, it's crazy. I mean, it's fun to watch.
Dylan, is this the future? Tariffs on everything, labor being removed from the country, so there's going to be no supply of homes ever again moving forward. So those who own the homes now, they've won the game of capitalism. Might as well build a service around trading those homes.
No. This is just what this chart is nothing more than a specific structural situation in a publicly traded security with a reversal of fortune, with a limited float and a big short interest. It happens from time to time. Everybody takes it straight in the beak, but it's not an indication of anything other than a small float, a short interest and some good news at the wrong time for the shorts, so they just get face jammed. But it doesn't have anything to do with tariffs or the future of housing or any of that nonsense. It's just an unfortunate situation for the shorts and a lucky and a lottery day for a handful of party boys that were in there on the right time on the right day.
Well, then, a modest proposal, Mr. Radigan.
Lay it on me, pal.
Here's rocket companies. Let me give you a profile of what just happened with Open Door. Open Door has a float of just short of 640 million shares, and the short float was about 22% coming into this week. Here you have rocket companies with a float of about 143 million shares and short interest of 51%. If Open is a powder keg with its short interest in the 20s, then what's Rocket? Rocket was up 7.5% today. I think other people are sniffing this out too at this juncture. I could make a hell of a technical case for this as well, because we do see a move here off the high. And what's this? You have your breakout, you pull back to the trend line, and we catch our 50 in 1 month, and we now move up to a new high. So clearing out 16. Who's to say this can't go back to 21? I mean, if there's going to be, Nick, you've pointed this out to me almost every day for the past 2 weeks. All of the no, that's not the word you use. All of the crap is rallying.
Right. That's a nicer way to say it, but yes.
Dylan, you say
flying.
Yeah, right. And Dylan, you're saying that this thing's just going to run right now. Why not?
Yeah, no, I like this. I mean, you have my attention. I don't know as much about the situation as you do, but the situation you're describing in the context of the other situation is awfully appealing. I mean, I'd be interested in sort of how you structure this.
If we're going into if a retail frenzy, as social media and meme stocks, as it were, as it's now been dubbed, I will disagree. I think these are smart market participants who are seeking out and profiting from inefficiencies in the market. And while a lot of people could get run over if they join late, the folks who caught this early are obviously feeling pretty good about themselves today. So tip of the hat to them. Yeah. But Open Door really is the first one to get the attention right now. So maybe it spills over into some other things. I'm going to take a flyer tomorrow morning.
It's also Open Door is was a sub-billion-dollar company. Rocket is a much bigger company, so it's a lot harder.
It is.
I get that you can definitely see that sympathy type move, but we're not. GME was moved when it was a $1 billion company or less. Sub-billion dollar was when it started.
Yeah, like 800, I think, million market cap.
It was something around that. I mean, it's now a $10 billion company, which is obviously quite the valuation for it. But Rocket being at a $30 billion company, it's hard to move 30 billion to 100 billion unless you're Palantir.
I mean, the problem with that, is it also, I mean, I just don't know how much depth there is. I don't know how deep into something like this you can really go, just because of the float being what it is, I mean, because you're going to want to get extremely deep, but I just don't know if it's going to be available.
Oh, not extremely deep, like long the 17, short the 18 call spread. Maybe not at 25 days, but that's like a 4-to-1 reward to risk, right? Looking for another $2 it went up $1 today. Looking for another $2 here. You're talking in there of 12.5%, which again, sympathy trades. This is not like this is not a way that we reliably make money around here on overtime, Dylan. But with that madman ethos, if we're at the part of the cycle, where we were in 2021, think about the timing of this. We get the retail meme stock, all of the, Nick, as you said, direct quote, shit flying, end quote. The market then tops out later that year, right? When the companies that really don't make any money and have no substantial reason to be rallying or going up.
I mean, all goes hand in hand. You got markets are at highs, so everything looks expensive. Volatility is near the lower end of where it's been trading. People look for this sort of stuff. You're looking for something that's moving a lot, that's cheap, that is moving. That's it. That has some volatility. And that's usually, when my interest gets peaked to be playing a little bit of downside in the market as a whole when you have this sort of stuff. And we've had multiple of them over the last couple months. We've had, the quantum computing stocks. We have the, treasury companies now. We have the, the healthcare stocks are kind of the other direction. But it's been kind of we're getting to the point where it's just goofiness in the markets. And that's usually when I get a little cautious.
Yeah,
Yes.
It feels like it's a good time to start getting some powder dry. The seasonal tendency for August for volatility, at least, at NASDAQ, the S&P 500 may chop around in August, but volatility starts to expand and historically spans a lot between August and September. And it just feels like everything, Dylan, everything right now is, I don't want to say price for perfection, but nothing's really dragging us down. It feels like a market that if something legitimate does happen, where a lot of people are going to be caught flat-footed. So getting a little bit more defensive here, particularly if you're planning on stepping back from trading. This is also on my mind. Like, I'm taking off the last week of August around Jackson Hole. And so do I want to have to be on vacation worrying about significant risk in the book? I want to be delta neutral, if not slightly short during that window. For my trading book, I'll keep obviously my long-term holdings. Those don't get touched. We accumulate there. But for the trading side of things, yeah, I think right now I have short deltas on in stocks in the tastylive follow account, just plainly. I'm long a put spread in ES now, which I guess is the best part of today. Dylan, we were talking last week about expecting one more little squeeze to the upside. It worked out pretty well. I was able to get out of the market at 23,410 today. In a zero DTE NASDAQ call spread, 23,350, 23,500, and then the market keeled over about 20 minutes later, and that would have expired worthless. So I'm very content with how that, let's be like Icarus and try to fly as close to the sun before our wings melt. Maybe they started melting today, but I'm free and clear. I got my parachute on. I'm coming back down to earth. And it just feels like it's a prudent thing for most people. This is not the time to get levered up when volatility is really low, when you have IVRs under 10 in NQ and in ES, Nick. That's not what the data suggests.
Yeah, I agree.
Okay, let's talk bonds. Let's go over to rates a little bit here. We're at the halfway portion of the show. We do need to talk something related to the Fed, even if Ilya's not here, Dylan, because Fed Chair Powell is speaking tomorrow. I guess there's a caveat to that, because Powell and Bowman, one of the Fed governors who will also be speaking tomorrow, are currently in the Fed's communication blackout window, whereby if they do speak to the public in a professional capacity, they're not explicitly allowed to discuss monetary policy or things even related to monetary policy. So Powell can't say, oh, yeah, I think inflation's heading in the right direction. And thank goodness the unemployment rate is going up, because low inflation and high unemployment could lead us into certain outcomes. He's not going to talk like that. He never does. So I don't think we should be paying much attention to Powell's speech tomorrow. That said here, though, Dylan, I couldn't help but notice that when Bessent mentions that no tariffs may be coming on August 1st, the long end of the Treasury curve gets its lift. Is that the entire game for us right now as bond traders, this on again, off again?
Yeah, well, because the bond market is just pricing inflation at this point. The bond market is pricing inflation, and it's pricing, time to rate cuts. And so as long as the more tariffs there are, the more inflation there is, and the longer the time is to rate cuts, and the less tariffs there are, the less inflation there is, and the less time there is to rate cuts. And so the tariff thing is really the lever that controls the bond market right now, although the bond market also controls tariffs, because when the tariffs become out of whack with whatever the bond market deems tolerable, you can see what the chart does when it jacks up as it did in April and all the rest of it. And so there's sort of this two-step going on between the political piece of the economy and the president and the Trump administration and the tariff talk, and then the bond market's calibration of whatever their perception of the realistic probability of that action actually is, and its implications for inflation and timing to rate cuts. I tend to be, as you know, somebody who looks at any sort of tariff-driven sell-offs, whether it's in stocks or bonds, as a buying opportunity, because I tend to be pretty confident that we're not going to see material tariffs, that tariffs will end up being some version of 5 to 10% reciprocal in most places. It'll be modestly inflationary, but that anything sort of above and beyond that, with probably a few exceptions, maybe American steel and stuff like that. I just think that the numbers are going to be actually pretty benign relative to expectations. And so when you get a sell-off, wherever it may be, that sell-off tends to be an opportunity, not a liability.
Opportunity, not a liability. Nick, have you had better luck than I have in bonds recently? I suppose it's been okay, but my directional shots to the upside haven't worked. It's only been the neutral trading strategy, short iron condors, that have given me anything worth writing home about.
Yeah, I've been sitting here. I'm long around like the 112 handle. So, I mean, I've been playing for bonds to go up, rates come down. It obviously has not worked over the last like 2 weeks, but this is a nice little move higher. I think trading in a range and playing with iron condors or strangles, if you can hold that sort of position, is kind of where you're at. I don't think rates are going anywhere significant. Like, I don't think there's a big change in rates on the horizon anytime soon.
No, and the market's been pricing in a reduced probability of that coming into this week. We see that Fed cut odds for both July and September are now at cycle lows. So I don't think that's going to be much of an issue here. No one's going to talk about it. No one's going to complain about the fact that rate cuts aren't coming, because rate cuts are medicine, right?
I know one guy that's going to complain about them not coming.
Won't be me. No, rate cuts are a good thing for the stock market. Things are moving up, right, Dylan? Hasn't that been the mantra for the past few years around here? We don't need rate cuts. Stocks are at highs. Good news.
I know, but we have this new situation where there's one particular individual that my friend Nicholas has just referred to, who believes that he has a very specific vision of where rates need to be, and the longer the rates don't go to that location, the more boisterous that individual is likely to become. Although I do think that the bond market is more powerful than that individual, and I think that the people around that individual are pretty, even when that individual floated the termination of the Fed chief in recent days, that lasted, I think, an hour and a half or something before it was tabled.
Less than that. I think it was like 30 minutes. That
30 minutes
was maybe 30 minutes before somebody came on and said, no, that was just a thought.
Well, they got the preview of it, right? That little hour or so window. Yeah. You had stocks down, bonds down, dollar down, gold up. And it was just like flashes of early April across our screens again. And that's the reality. Powell gets fired. Gold's at $4,000, right? I mean, I hope so. I don't own nearly enough gold. Powell's getting fired. My goodness. But rates here are a stick in the mud. I do want to go over to the world of currency, because, Dylan, you made a bodacious claim before that the dollar is going to make us all rich. I feel 11% poorer on the year thanks to the dollar's performance, but perk up my spirits. Why is today's price action make you nonplussed?
Me?
Yeah, you're Dylan.
My comment is not a reaction to today's price action. I continue just to hold. I mean, look at that chart, bro. I mean, look at the last 6 months. And so I just think that the absence of an alternative in general and the severity of the sell-off give me more confidence in that little sort of uptick sequence you're seeing in the days, before the last three candles there, than these three candles offer us. And so I just think that based on price extreme alone, that the asymmetrical probability, to use my friend Nick's phrase earlier today, is still dollar positive more than it is dollar negative. But it's not, has nothing to do with today's price action.
Okay. Nick, do you have any currency exposure going on?
I do. for the last couple weeks, I've been getting long the dollar in various ways. So I am in total agreement with everything Dylan said. It hasn't been a fun trade to be in, but I am nonetheless in it. I got some call spreads in the euro here. I put some on today. I'm long a couple of different currencies, or I'm long the dollar against a couple different currencies in my tastyfx platform. I am short the Aussie dollar against the US dollar. I'm short. I'm long against the franc. I'm long against the shekels. So I got a couple different positions that have not been fruitful for me. But I agree with Dylan. I think and at some point I feel like that's going to come into play for the big man. You can't have the dollar continue to be weaker, purchasing power being weaker. I feel like that's a bad story. I feel like that story is going to have to be talked about. Real returns with, against stocks is basically zero. Mm-hmm. So,
well, yeah, right. If you're a foreign investor right now and you've been investing in the U.S., you are negative year to date still.
So that's a story.
That is something to consider. Yeah, dollar Swiss today. Interesting move here to the downside. Not a huge move, but many of these currencies are trying to cross a threshold where the dollar previously, was living, and it doesn't look like we're able to get through there right now. I point that out for the British pound, for example, which we are trying to get back above the uptrend that we have from the January, the April swing lows here. We run into the backside of that, plus the 1 month moving average today and stall. You can see that in the euro, where we've actually already overtaken a former swing level. We fell below it last week, and we're now back above the 1 week and the 1 month, coupled with the earlier year-to-date high in April. That's not looking fantastic. The yen here, this is the real sand in my gears today. I had a great day otherwise trading. The yen decided to bounce because the Japanese elections weren't as bad as the market feared. Bad being that the current ruling LDP party with its coalition partner Komeito doesn't want to roll back the consumption tax because they already run gigantic deficits and debts. Debt to GDP ratio in Japan is near 250%. And so with these other parties making inroads, the odds that this consumption tax would be axed completely, we have to unroll that a little bit here, because LDP and Komeito, they lose the upper house, but they still, the prime minister is still going to stay in his job. So we're off of those extremes. What does that mean to anyone here? I don't know, Nick. What I do care about is the fact that this is a politically driven bounce to the upside. And it doesn't change the fact that regardless of these election results, the reasons why I was short the yen still persist. Because we take a look at the CFTC COT report and the Z-score for yen positioning held by speculators, rolling 20-year basis, still north of 2. It's an extremely crowded trade right now still. So I'm going to continue to lean long the yen. One day does not make a trend, Dylan. I think that the dollar has a chance here still. And so I'm going to keep pushing on with that. The 0067, 0068 call spread, I know that's a place where people were shifting. As we've been discussing here and over time, I think going even further out of the money is a lot more fun because we have more convexity. And if the dollar is really going to rebound, the two prime places would be the currencies that have suffered with their own higher yields, the British pound and the Japanese yen. So my heart's still in this trade. This is the blemish on my blotter for today's session. And there is a rational explanation for why it turned out the way that it did. Fade the rally is basically what I'm saying.
Fade the rallies in
6J, 6B, 6J, and 6B. British pound, Japanese yen. Dylan, we've been metals people for a long time. Nick, we haven't heard you opine on this in a little bit. Quietly, gold is putting in one of its highest closes ever today. This is the 1, 2, 3, 4, 5, 6th, 7th highest close just by eyeballing it right now. What's your take on this metals market? There's no longer the volatility that we had in here the last time we sniffed 3,400 an ounce.
Need to be long assets. I think that's the sentiment across the board. I mean, I think the move today is helped by the move in bonds, obviously, But I think in general, it's just, you see the movement in Bitcoin and you say, you know what, maybe there's something of a catch-up trade in gold there. I just think it's, risk on, just trying to buy assets. I guess gold's not really a risk on asset, but I think it's own assets is the fact here.
But I just wonder, do you think that the own assets move if you're a dollar bull, do you have to be cautious on gold and silver and Bitcoin and all that sort of dollar alternative things, or can the dollar rally and you can still have the metal strong, crypto strong?
It's a good question. It's a good question. I don't know. I think it's it's an interesting point. I think it's just kind of a own everything. I mean, we've watched everything go higher. So
it's just a risk on party boy party.
Exactly. And I think this
don't
was
overthink
kind of this was stuck in the mud for the last,
months.
2-3 months, and it's having its moment. I think it's just a risk on catch up.
I mean, if we're going to flood the system with more stimulus, I know it's unpopular. We are, right? But I know it's a weird way to conceptualize it, but what's a government deficit? Government deficit is a private sector surplus. And where is all the money going right now? The bottom 80% are getting a tax hike as a result of the Trump tax legislation. The top 20% are getting a tax cut. Where do wealthier individuals put their money? Do they spend it more on knickknacks and blue jeans? Or do they save it? They're more likely to save. They have a higher propensity to save at the margin than lower income or middle income people. And when they save, do they just put it in the bank? No, they have a required rate of return, so they're not just going to clip CDs. They're probably going to put it into the market or real estate. They got to make it rain somewhere, and they're just not going to get the return they want in their savings account. So the tax cuts that are going to the top 20% probably flow back into assets, Dylan, which I think has been a consistent point of view of ours around here. And I think the price action is just vindicating it. So even if we have a pullback in the equity market, like give me a 5% down move over the span of 2 or 3 weeks, get a lot of people scared, absolutely got to buy that dip, given this backdrop of just liquidity and more deficit spending and a Fed that may cut. And let's just say the Fed cuts with all this deficit spending. What happened to stocks the last few years? They went up. We don't need to overthink that for now. Nick, let's go in a direction where you'd like to go after this, but I know, Dylan, yes. I want you to go out the door here because you have another engagement that you got to get out for. Give us a final closing word before you flip off and head off.
I just think don't overthink. I think it's a risk-on world. You got the earnings. I think that that overthinking it is where money goes to die.
Well said, Dylan. We'll see you tomorrow back here on Overtime. Thank you very much for coming here today. Folks, we'll see Dylan tomorrow. Nick, it's just you and me the rest of the way here as we wind up this show. Our very friendly friend here has another engagement at 5. He's very busy these days.
He's a popular guy. He's great on air. So, we can't keep him all to ourselves.
That wouldn't be fair of us.
No.
Nick, let's go in a direction. What do you want to talk about here as we wind things up? I have a few other thoughts in my mind, but do we really want to talk about oil, right? Okay.
Oil has been a great trade. I'm trading any sort of out of the money premium over the last, really since obviously the 12-day war that ended, but for the last couple months has been a good trade. Mostly for the year. I mean, you had their face ripper when we were in our little war, but other than that, it's been a nice vol contracting theta decay trade. It's not very sexy. I get it. But I give it its dues, Chris.
I asked Tom this often enough when volatility is this low. Do you see the 19.6 IVR in oil as still worthy with engaging? I know it's not 100 anymore like it was a few weeks ago, but it's still better than ES or NQ.
Yeah, I think there's still meat on that bone. I mean, obviously with anything, size is important, but I think to have just something a little bit more diversified from the rest of your trading. Oil is something that, you should have some positions on, whether, with the low volatility, if you just want to play one-sided here or just sell a put spread, just sell a call spread, as opposed to playing both sides and avoid some of the volatility one way. I respect that, but I still think it's tradable here.
I talk about this all the time. I'm writing this down actually right now. I got to share this on Twitter. Oil study. Okay, it's written down. I've read this study so many times in recent years, and I'm sure the authors have updated it again. I got it through one of these CFA emails that I have, but it was like, how do you predict oil prices in the market? And the data shows that if you're going to make a bet on where oil prices are going to be at any point within now and 364 days from now, you bet on the current price. You're more likely than not to be correct. Once you go past a year, you can start to look to the futures market, and the futures prices actually a pretty good forward indicator. But don't look to the futures market, right? I would never go to the trade tab here and say, like, where do I think oil is going to be, in November? Okay, 63.83. That's where oil is going to be. I mean, maybe, but I would rather bet on it being at $65.73, given the preponderance of history. So, according to that point of view, I've been doing directional neutral things in oil again post the 12-day war, and it's worked out just fine. Volatility's come in, the market's been pinned about $2 higher, so it's not the end of the world. It's not stocks, but it's working, and if it's not broken, don't fix it. I know that's not really fun to say. I'm looking at the trade ideas here, right? We want to play something like Out of the Money, Madman, and Rocket. This is not one of those. This is a very like workman's type of trade, risking 4 to make 1, 65%. Like you just do this, 45 in, 21 out.
The bread and butter, baby.
It's a great phrasing. Bread and butter
sell
trade.
An iron condor with, you want to go 58 days out. I'm fine with that. Do a 1 or 2 point wide iron condor. You wrap around the 60 to 70 handle. It trades at 1/3 the width of strikes. It's a pretty cookie cutter trade. That's kind of been where the trade has been. We've bounced between 60 and 70 for the better part of, 6 months ish, pretty much the whole year. Besides our one, explosion to the upside, I think that's just how you do it in oil.
We need to talk about what's going on in natural gas. Sure. Is there a chance that you're doing anything in natural gas that's not as nerve-wracking as what I'm doing?
I do not currently have a position in natty gas. I actually played it to the long side, I believe was my last trade in there with Mr. Westwater. So we were selling put like at the money put spreads. I took them off early in July 2nd on the 14th, but I avoided some pain today. What is happening there?
I think it's just the fact that the weather forecasts for the area, they're just not cold enough for the Northeast. I mean, the new NOAA forecasts for the week ahead have a gigantic heat dome over the middle portion of the country, but by population, it's not like the heat dome that we saw earlier in June. So this demand for natural gas might not tick up from here. I'm directionally neutral now. I got out short last week at the low on July 9th. And so when it rallied back, it felt like a slap across the face. So I'm a little less bothered by getting out, but I did switch to directionally neutral. And so this movement isn't exactly crazy for me here. Where are we? NQ. Do we move out into the next? Where are we over here? NGU5. Yeah. Okay, so 36 days to expiration, 2934243. I can hold on to that for a little while. But the volatility is what draws me in because it's a 45.9, and we just don't see that much of anywhere else right now in this market.
Mm-hmm.
Do you have any tips for trading natural gas? Because I think this is an animal where we like to joke about it being a honey badger, but it's really not like other futures products.
Yeah, my tip for trading natty gas is just don't trade natty gas. It's one of those underlyings that has just always had my number. I've never been directionally correct. Anytime I'm short premium, I'm getting my face ripped off. It's just one of those that is really, really hard to trade. And there's all sorts of seasonality to it, and roles of the different futures, because you have you have the Widowmaker spread, there's contango and backwardation at different times. It's just one of those, like, I feel like you gotta be a natty gas trader to trade natty gas.
Got to be a natty gas trader to trade natty gas. Yeah.
You don't have to be a bond trader to trade bonds. You can kind of,
Yes.
you know what I'm saying? Or stocks. Like, you don't have to look at, you can sell put spreads and not have to know everything about the stock. Natty gas, like, you kind of got to do some digging, and that it's tough.
It's tough. Okay, let's end this on crypto. Bitcoin here pulls back in today. By my little eye, I spy the fact that this is now 2 days in a row where we've closed below our 1 week moving average. I would also note that the low from Thursday, 17,720, is eclipsed on Friday. Friday produces a bearish outside engulfing bar at what would have been a new all-time closing high. That's raising my eyebrow here. The pullback today, fade intraday, raises my eyebrow here. I think you and I are in a similar boat where in recent weeks and months we've been looking at IBIT calls. Those here, I'm still sitting long the 75 short 85 with with 60 days to go to expiration on the follow account. But you mentioned that some of your crypto positions in the short term at least are getting a little big.
Yeah.
I want to separate this into two quick thoughts. And actually, I think the more important one is less the market commentary and more about the position management. You have trades that are going really well for you. You've allocated 1, 2, 3, 4% of your portfolio to them, and now they're 5, 10, 15%. And you obviously don't want to have that much risk into one position. So what do you do? Because you obviously don't want to get out of a trade that's working well, but you're now carrying something that you weren't expecting. How do you balance that out?
I mean, it's the hardest thing to do. The wins are never big enough, and the losses are always too big.
Right.
Like that's always how it is. You look at it and you're like, well, it could keep going. It can get even bigger. And then when you're losing, you're like, why didn't I just do one contract or two contracts or 5 contracts instead of 10 or 20 or whatever? So the trimming is always tough to do, but I think it's prudent. And we had, Mondays we have Ryan on for Option Trading Concepts Live, and he has been trading on the follow page through some of the crypto moves that we've had. And obviously he's not top ticking everything, but he's been kind of lightening up, and it's okay to take some chips off the table and lighten positions up. And I think that is my sentiment here. I mean, I was hoping to see volatility expand a little bit into this Bitcoin move. It has not expanded in the same fashion that it has in the past of, 10K bar and volatility explodes to 70, 80, 90%. We got the 10K bar and volatility went from 45% to 55%. It's a nice vol pop, but it's not the explosion in volatility. So, I think it tells you that this isn't like a, everybody rushing to buy type move. So I think you take a couple chips off the table. Don't have to, I'm not bearish on this stuff on a longer time horizon, but I'd love to buy a little dip here. And ETH is the same way. I mean, you look at this chart, and how do you not, if you've been sitting here waiting for this move and you finally got it, how do you not take some of the chips off the table?
Right. I mean, if you got in near the April lows, you've doubled your money.
Yes.
Right. And so how do you justify? I mean, it's up 5.71% today, but maybe an island reversal coming together, right? We gap open higher, and then we actually don't trade green during the actual session. We do close to the downside. There's some writing on the wall. I know that MicroStrategy is back in the world buying more crypto. I think they just announced
another treasury or like a sale of more. They have those 2 other stocks that they launched that are basically just more liquidity.
Yeah.
DJT
something. Today as well. We saw that they announced, I think, a $2 billion purchase of Bitcoin. Not sure when that was actually made, but that was the headline. And so the stock was up, did come back in a little bit. But you're seeing these companies that they have exposure directly, indirectly, taking it on their treasury. They're having quite the run. And now we're having the things like Open Door, maybe Rocket go next.
Yeah.
In any event, Nick, we're done here today. We'll be back tomorrow, same time, same place. Overtime's 4 p.m. Eastern, 3 Central, always after first call, Monday through Thursdays at least. So for Nick Batista, I've been Chris Vecchio. Good luck trading. After this, a brief break. More Tasty Live coming up after this.
Stock markets take a leg lower because we're apparently going to get a run of auto tariffs coming from the White House, but we don't have the announcement yet. And ultimately, the markets don't run too far away. So while we wait for fresh fodder, we'll take an opportunity to look at a bigger, maybe even a more impactful story here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we are going to turn our focus to Europe because this has been a major part of what we've seen come out of the new Trump administration in the U.S. and the realignment of global relationships that it has engineered or is engineering. Of course, one of the biggest stories here has been the idea that Europe has become skeptical about the reliability of the U.S. military umbrella and wants to build out a massive rearmament effort so that it can take care of its own defenses without relying on the American backstop for the first time, really, since World War II. That has moved markets because, of course, such a thing would imply a tremendous amount of spending. And the real question is, well, we've heard this song and dance from Europe before. In fact, in the first Trump administration, there was an attempt to get NATO, that is to say mainly Europe, to build more guns for themselves and to shoulder more of the load for NATO and a more representative share to their actual membership. And so is this, in fact, different? Because the last time that this was attempted, Europe ultimately said all the right things and didn't do very much. Is this time different, and is the market reaction then going to actually be sticky? Can we trade on it? That's what we are going to focus on here today. So first, let's take a look at what the markets have done so far, and then we'll take a deep dive into why the markets will or won't believe, then come down to a trade idea on that basis. So, first and foremost, we can see the US dollar has been down since the beginning of the year, and the euro has led the way. Now, of course, we can see the dollar has pulled off a little bit of a recovery here in the wake of last week's Fed policy announcement, where the Fed basically said we don't need to rush to cut interest rates. But we can see from the beginning of the year, this is the start of 2025 right here, the euro has clearly been an outperformer, starting basically from late February going into March. So the yen here was outperforming, and then the euro from about late February into March rapidly surged ahead, at one point up as much as 7% year to date against the dollar. And of course, now we've seen this pullback, the euro still right on the leaderboard there with the yen, but a little bit of dollar strength here pulling the entire complex down. Nevertheless, we clearly see that something happened right here to dramatically catalyze the euro, and to a lesser degree the pound, but certainly the euro, to this dramatic outperformance. Of course, the first step in figuring out what all is going on here is to see what is the driver of the euro US dollar exchange rate. And We can see that here in clear representation. The purple line here, the spread between German and U.S. 2-year bond yields, that is to say the front end of the yield curve in the U.S. and in benchmark Germany, which is a stand-in for the Eurozone writ large, typically. It's the largest economy. And so we see here this very close relationship between where the euro goes relative to the dollar and this spread, which of course makes all the sense in the world. This is classic stuff for currency markets. The currency you want to own is the one that confers a higher yield. And we can see here that as the yield differential between Germany and the US moves, so too does the exchange rate as the yield advantage or disadvantage of the given currency moves around relative to the other. So here, for example, we can see from January of 2021, we start to have, from about mid-year, a conversation at the Fed saying, okay, it's time to hike rates. The hikes, of course, don't start until well into the first quarter. In fact, toward the end of the first quarter of 2022. But of course, markets are forward-looking. They speculate. So once the Fed around June of 21 starts talking about, okay, maybe this inflation isn't, quote unquote, a transitory thing, and maybe what we need is to really go on a hiking cycle, you see yields shift against Germany. So as this yield narrows, that's U.S. yields going higher and German yields losing step, relatively speaking. You can, of course, see that this is reflective of the U.S. having a yield advantage compared to Germany. And so here you go from about a negative 1% disadvantage for Germany down ultimately as you get into 2022 of a disadvantage in excess of 2.5%. And the euro follows. Subsequently, you see things correct. Most recently, of course, from September of last year to the beginning of this year, the markets were thinking maybe the Fed is sounding too dovish and they're not going to do all the hikes or all the cuts, rather, that they are saying. So you get a shift, again, in the dollar's favor in the yield spread, and the dollar strengthens. And then, of course, since the beginning of this year, you go the other way again. And this is the most recent surge in the euro. And you can see that, right according to form, it matches with an upshift in relative yields, where Germany looks a bit better on the relative yield spectrum compared with the US than it did before. And that's how you get the move in the spread and in the currency as well. So what's going on here? Well, as with the exchange rate, so to the yield spread, there's a pair in this dance. On the US side of things, we can see from September through to the beginning of this year, inflation expectations implied in the bond market, that's these break-even rates up here, the 5 and 10 year, they're rising. The yield curve is steepening. The 2-year, the 10-year rates, they're going up. Bonds, of course, in parallel are falling. And the dollar here, the dollar index, it's up. That is this move right here. And what we see since then is inflation expectations start to roll the other way. The dollar starts to roll the other way. Yields start to roll the other way. We start to see the change in this yield spread. We start to see the euro perk up. So from the U.S. side of things, you have lower U.S. interest rates, of course, shifting the yield gap in the euro's favor in relative terms. And we know at this point how this is happening. The leading PMI data, essentially a measure of business confidence over the past 3 months, has screamed that the economy is threatened by uncertainty around tariffs and fiscal policy in general, and companies are pulling back on spending, and that's hit economic activity growth, including in the service sector, which of course isn't immediately hit by the tariffs, but is impacted by them tangentially and in sentiment terms. And that's exactly what we've been seeing. So the market has taken to expecting that this will mean a more dovish Fed. And last week, the Fed didn't take the leap, but certainly commiserated with markets and said if only we were to see this kind of weakness go from survey data like business and consumer confidence to hard data like jobs and inflation, well, then we'd have to act. As if to say, yes, markets, you're right that we've become a bit more dovish in our thinking, even if we haven't in our actions, and sort of endorsed this move. At the same time, on the German side of things, yields have surged. This is, of course, looking a whole lot like what you see both in the yield spread and in the euro. And you can see it happens in the transition from February to March. So if you were wondering how the euro was lagging here and then surged to outperformance, this is the move you're looking at. And this is the bond move behind it. So not only is the US side of the yield spread moving such that you get more euro advantage, but you likewise see the same thing from the European side. That is to say, their yields are moving in a way that even further shifts the yield spread in the euro's favor relative to the dollar. Okay, so apparently the markets have heard the idea that in Europe you now have increasingly the president of the European sort of regional legislature, Ursula von der Leyen, saying that what we need is a big build out of defense spending. You're seeing Germany, forever the tightest purse strings in Europe, basically since they had the hyperinflation leading into World War II in the Weimar years. Germany has been incredibly suspicious of debt and of expansionary policy. You nevertheless have a situation where they've said that with the need for a military buildup, you now have a exemption for defense spending from the constitutional debt break that would cap that kind of spending in Germany. And of course, if you were to now have a huge amount of money pouring into defense contractors, that suggests a huge boost to economic growth. The numbers that we're talking about are astronomical from the lips of incoming German Chancellor Friedrich Merz and other leaders. Of course, France's Emmanuel Macron, the president there, he's argued for a more assertive European posture for a long time. He's talking about a European nuclear deterrence independent of the US, powered mainly by France and the UK, both nuclear powers. So there's clearly a level of spending that the markets are anticipating will come, and they think it's a lot, and they think it'll be a tailwind to growth, which of course then is a tailwind to inflation. It means fewer rate cuts from the ECB, so it means higher yields and higher euro. So far, so good, but do we trust it? Should the markets trust it? Or is this again a familiar song and dance? Well, certainly looking at German inflation expectations, they seem to have taken notice, and in the near term. So if we look at longer term inflation expectations, they jump on this news, but then they sort of settle to where they were before. And this is 20-year, 5-year, in this case, the 10-year with remaining 8 on it for the current bond. But near-term inflation expectations, they're still surging. They're still at some of the highest levels that we'd seen in 6 months. After this rebound, there was a pullback here, but now we're right back up here. And this seems to suggest that the inflation that the markets are anticipating is coming near term, that the spending is going to be front loaded, that the impact is not in some distant future. Moreover, ECB policy expectations have taken notice. Not only have we seen the stock of rate cuts for this year diminish a bit, but now, for the first time in really going back to the beginning of last year, the markets are actually anticipating about a 50-50 shot that the ECB will have to raise rates next year. 14 out of 25 basis points of a rate hike are now on the menu here. And that amounts to about a 56% chance that the ECB hikes rates. That obviously speaks to a significant inflationary impetus from stronger growth around this build-out. So again, the question becomes, well, the markets believe it now, but will they still believe it later? Or is this, again, another one of these rhetorical things that ultimately fades? And this is where a bit of theory helps. The great economist Robert Mundell came up with something called the optimum currency area theory that seeks to explain why a country would want to join a currency union. And this really tells you and illustrates very nicely how it is that the EU and indeed the Eurozone came to be, and explains all of the economic troubles, hiccups, and various crises along the way, and how what they've been in practice isn't so much an existential threat, though it feels like it at the time, but rather a forcing function for the project to advance. So consider this. If you're a country, some would-be country, that wants to join a currency bloc with some group of countries or one other country, but you want to consider whether you should have a joint currency and enter into a currency union, as the Eurozone is. You have a structure of costs and a structure of benefits. Over here, you have the degree of prior integration. So how close is your economy already with the bloc or the bloc of economies or the economy that you're seeking to join? And over here is just costs and benefits in some theoretical units. And the logic goes like this. If you join a currency union, you lose independence of monetary policy. In other words, you have a single currency, you have a single central bank. If you need interest rates to be lower because you're in economically dire straits, but the bloc needs them higher because they're doing well, well, then that's not advantageous for you. But if there's already a lot of economic integration, then chances are that you go through booms and busts at about the same time. And so you don't care about giving up some monetary policy independence for the benefits. And the benefits are, of course, the more trade you do, the more integrated you are, the more you extract from reducing friction, like borders, tariffs, quotas, all manner of rules getting a common denominator between you and the currency bloc. All of that makes doing business cheaper, easier, smoother. And of course, that is a tremendous economic benefit. So the more that the would-be joiner of a currency union is already integrated with the union it wants to form or join, the more it cares about the benefits. So as integration goes from 0 and up, the more the benefits matter and the less the costs matter. And there's a magical, obviously theoretical, equilibrium point here, beyond which the benefits outweigh the costs, and it makes sense to join the bloc. Let's follow this logic to look at the European Union. And if you look at it on purely economic grounds, even Robert Mundell himself would argue that the Eurozone is not an optimum currency area. That is to say, it is not economically sound. The level of integration is insufficient. Even things like the Maastricht Treaty, the Stability and Growth Pact, that mandates greater degree of symmetry and integration by saying members have to have certain budget thresholds. They can't run higher. They have to have certain common economic criteria, convergence criteria, they're called, so that there is symmetry in these business cycles. We, of course, find out in practice those things were not there, but integration happened all the same. So economically didn't make sense, and we have a litany of crises along the way to demonstrate that this integration ex ante was not sufficient. Certainly the Eurozone debt crisis of the 2010s, 11s, and so forth, that makes the point loud and clear. But nevertheless, we have this thing created. How? Well, consider what mutual defense does to this calculus. And consider that the first European communities were European coal and steel, military industry, European atomic energy, military industry. That's in addition to the trading bloc or customs union. And so you immediately see that the goal starts being France, basically, saying we want to be integrated in German military industries such that German tanks don't roll into Paris again. And when you consider it in the context of this model, you would say, well, is it an economic benefit if there isn't war? If you reduce the chance of war? Of course, the answer is yes. If infrastructure isn't being destroyed, consumers aren't being conscripted, then the economy isn't being disrupted. So the avoidance of war is an economic good thing. How do you reflect that in this chart? Well, the area where benefits outweigh the costs should get bigger if the thing you're doing is good for the economy. What does that mean? Well, it would mean the benefits line shifts by a force other than the costs and benefits themselves and the degree of integration. Some outside force shifts the entire line such that this area grows by this right here. What does that tell us? It tells us that the acceptable level of integration goes down. And now the participants will accept less economic perfection in the structure because the military benefits outweigh. And this is the story of the southern expansion, where Greece, Portugal, and Spain are admitted, even though they don't have the economics for it. This is, of course, the initial conception of the entire thing, and France wanting veto power over German military might. On and on and on it goes. And every time that this thing hits a crisis, much as now, this logic is the forcing function for deeper integration and for the killing of sacred cows and for the breaking of things that were thought unbreakable and for the creation of something which maybe doesn't make initial sense. So the upshot seems to be that Europe should be believed. This fiscal tailwind really is coming because this is exactly the kind of forcing function that usually moves Europe to finally get to doing stuff. And so this pullback that we've seen in the euro here after this surge, resting now right around the 108 area, looks much more like a buying opportunity than it does the fizzling out of a move that isn't credible. And although we don't necessarily have confirmation to get long at the moment, the upshot seems to be that wherever this settles, here or perhaps a bit lower as we continue to probe down, the path of least resistance, perhaps structurally now for the euro, is higher. And this weakness is a chance to participate with a bit of a bargain price relative to what we saw even last week. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Happy trading. Macro Money's back tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, The action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's gonna take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
I hope they don't subscribe to cherry bombs. Oh no!
You better scrub your phone, honey.
Oh no!
You better wipe it clean.
This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
Because it takes work to maintain friendships, because life gets in the way.
Guys, with women it does.
Well,
it takes work.
Men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean, it's...
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit?
You would not know.
So I said, I have to see what this is like. And it is a boat-worthy apparel, so I'll ship it down to Florida. But I just wanted to be like my man Tom, see what it feels like to be a big shot and stuff like that.
Will you guys please wear them matching on the flight to Denver next Friday?
What's going on? What the hell am I looking at? What the hell's going on here? What is this?
I'm twinning.
Join us. You got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, of course, Katie McGarrigle. Katie, what's up?
How you doing?
Pretty good, I guess.
Doing
Excited
all
to
right?
be back.
Yeah.
Monday. Another one in the books.
Yeah.
Yeah.
It's all right so far.
How you doing?
Doing okay. I've finished my.
You sure about that? You didn't sound very convincing
I
there.
figure till we make it. Yeah. I finished my samurai arc.
Oh, yeah?
Yep. So I'm off the sauce until after the wedding. That was my rule. So no more games for Katie for now, but you guys can check back in 7 to 8 weeks. See what I'm doing. I did convince your brother to play, though, the game that I was playing.
Well, it doesn't take much to convince him to play video games, just not at work. So is it just eating into your productivity ahead of planning for the wedding, getting that all taken care of? Like,
Yeah.
I don't understand the connection here. No video games because of the wedding?
Yeah,
Okay.
yeah, exactly. Like, you know, when you have such a finite amount of time to do the tasks that require needing to be done for
Yeah.
the massive party that you're throwing, it's like, okay, do I spend 2.5 hours dissociating and running around killing Mongols, or do I actually buy shit that's really important for the actual wedding day?
Yeah, I think you could do a little bit of both, honestly. If you just kind of, box your time.
Don't tell my fiance that.
Schedule it.
No,
Okay.
I'm setting boundaries. I have to, I need to like read books and or just do wedding planning stuff
Okay.
from here on out.
Fair enough. The
Yeah.
chat loves it. If you're not in the chat, get over to YouTube. Tasty Live is the channel. We're streaming over there, and we've got the live chat going. So if you want to type some crazy shit into the chat, well, you know what to do. Let's see who's in here. We got Mark, Katana,
Yeah.
Emmett.
Mike. What's up, peeps?
There's a few, Katie.
That's okay.
Yeah.
We'll take it.
Grumpy Mike, what's going on?
What's been going on in your world? Anything, have you been doing any new restaurants?
Just crypto prices going higher every day. I'm $1 closer to just riding my jet ski across the Gulf of Mexico.
Okay. Like
into the
Kenny Power
sunset.
style?
Yeah, something like that.
All
It's
right.
been a dream of mine for a couple of weeks now.
Are you a jet ski boy?
I could be.
Okay.
Yeah. We send out the Tasty Crypto midweek market update every Wednesday morning. And if you don't get that, sign up over at tastycrypto.com, hit that newsletter link. But the reason why I bring that up, it's a plug, of course, but we've got a little jet ski at the top. A little kind of nod to my fantasy.
Okay.
All right.
I respect it.
Yeah.
I like riding a jet ski. I've only done it a couple of times. I did do it down in Key West, which was pretty cool.
Hell yeah.
But we had some kind of choppy water that day, so I felt like I was just like breaking the
Then you can
fiberglass.
ramp it out of the water, you know?
Yeah, no, I
Not
don't.
your thing.
I want to do like, I want to be like jet skiing on glass, like style. Like that's how smooth I
not
want the water
fun.
to be. I know. I guess I have like a little bit of a taste for the adrenaline, but not that much.
Okay.
I don't want to like ruin my
Yeah.
grip.
Well, I
my
mean, you can
nails.
only fall off if you fall into the water.
Yeah, and there hasn't been like tons of sharks in and around, Florida
That's true.
for quite a while. Thanks, climate change.
Well, maybe you you just jet ski in Lake Michigan eventually.
Yeah, there we go. Yeah,
Do a jet ski day.
I need to find some friends with some jet skis in Lake Michigan.
Oh, we get ETH up to like 5K. We'll just rent them.
Yeah, speaking of, I covered my ETH.
Hell yeah.
So
So
took some
presumably
winnings
that
off
means
the
you
table.
sold out of your position.
I did.
Okay.
Yes. I had been long since the low 2000s.
Nice.
So, with using like just dollar values of ETH. So I had been layering into that since probably when you and I started the show back in November.
Like a few thousand here, $250,000 there.
Yeah. Chump change.
Yeah. But no, I hear you. So just buying a little bit here and there, and you get to a price where, we're not at all-time highs, but we've gone straight up for the majority of this month.
Yeah.
We can talk about whether or not we're overbought. I mean, I'm seeing some signs that, you maybe see a little bit of a short-term kind of exhaustion here.
Sure.
We'll see. But yeah, I think it's a great place to take some profits. If your range has been 2 to 4, you're pretty much at 4.
Right. Yeah. So felt good about that. Like I said, couple $100 in my pocket now, which feels great. But like you said, and looking at, the preview of the slides that you're going to go through, we've just got a sea of green.
We do. Let's jump into these slides here. It's stablecoin summer.
Hell yeah.
Stablecoins have been the theme. We're going to talk about the big release on the Tasty Trade platform and give you a peek at that and a demo, I suppose. I mean, it's just transferring funds, depositing funds, but you can do that with a stablecoin now, Katie.
Yeah.
So we'll show everybody how to do that if they're not familiar with it. That was launched quietly, a little soft launch, I suppose, on Thursday. You'll start to get some of those customer emails, and you'll see it throughout the platform and on other spots on the website. But you can now deposit stablecoins if you want to fund your account 24/7, instantaneous.
Well, and that's what I think is so like when I sit back and like actually really think about it, how archaic like the traditional system is, and how we've all thought for a long time, oh, it's normal to have to wait like 2 business days for something to clear before you can actually like jump in the car and drive it. Like, and now we have just a way quicker means of doing that, right? So
yeah,
I
it's
think
pretty
this is
cool
a
when you
great
see
addition.
it live. You see it in person.
Yeah, and I'm happy. I'm looking forward to seeing it in person.
Well, we'll do that towards the end of the show. But before we do, let's just run through kind of what we're seeing in the market. Katie taking some profits with ETH north of 3,800. We've pulled back a little bit here intraday, but we've got Bitcoin near an all-time high. ETH's not quite there. Solana and the majority of the rest of these aren't really at all-time highs, though they're trading a hell of a lot better than they have been. And it's been pretty quiet in the market for some time, right? The volatility that we're used to in crypto hasn't necessarily materialized. You're starting to see a little bit of a pop there. We do have a few tokens that are now well over 100% vol, which you only really see in these big rip-roaring kind of bull markets. But yeah, a lot of green on the screen, as you mentioned. ETH up 143% in the last 3 months. Litecoin, XRP, Doge, you name it, it feels a lot better. That said, again, not many of these are at or near all-time highs, aside from Bitcoin. So what you are seeing is a bit more volatility come back into the market and a big bounce off of, in some cases, off of the lows, or that's been ongoing for a month or so. But we're looking at tokens that at one point, many of these were down 60, 70, in some cases 80%. So you are getting a big move off of the bottom. I do think that they've bottomed, but I don't think that this is it, or that it's the end of alt season and it was short-lived for a period of like 2 days.
Yeah. No, this is great. I mean, what have you been most surprised by? any of it?
Yeah, honestly surprised that some of these tokens that were a little bit more prominent last cycle are just having a huge move here. Maybe I shouldn't be surprised, but I look at things like Bitcoin Cash, Litecoin, XRP continues to do well. It's one of the few that's actually outperforming Bitcoin. So up 47% year to date versus Bitcoin, quite the move. But, a little surprised that you're seeing some big moves here recently in things like Cardano. And again, maybe I shouldn't be. XTZ, Tezos, XLM, Stellar Lumens. Maybe they don't need a narrative. If they have a narrative, I'm not sure what it is, aside from just a massive move in price here. But this XLM move has just been absolutely monstrous, up 100% in the last month. And it's a good reminder of, just how quickly things can move both up and down in crypto. But a lot of times there's this knock on the space in terms of spot cryptocurrencies because you don't have the ability to trade with leverage. You can't go short. You can only buy it. And obviously you can trade the derivatives. You can trade listed futures. You can trade perps in some places now. But you really don't need that much leverage when you can move 100% in a matter of a week.
Right. Yeah. And especially when you're looking at the actual prices of some of these coins, like we've talked about how I've likened them to super cheap stocks or penny stocks even before.
I think that's fair.
And like you're saying, like, yeah, sure, maybe you're not getting like the leverage of what you could get if you were in like a portfolio margin account trading a certain type of future, but like you're saying, in 30 days, if I can double whatever my investment was in one of these coins, like that's pretty, and granted, it has the opposite effect as well, but that's a pretty powerful thing to see.
Yeah, I mean, to your point, they can go down, obviously, they have. And we've experienced these boom bust periods or cycles throughout time. And what we've seen is these massive upside moves, exponential upside moves, and then you get a 50 to, 70, 80% worst case scenario drawdown. Sometimes things just go to zero and never come back, but Bitcoin isn't something that's gone to zero, It is volatile at times, but again, crypto historically has been an asset class that has this asymmetric return profile, meaning there's a lot more upside than there is downside. Obviously, it can only go to zero. We're looking at tokens that in many cases historically, and it doesn't mean that it's going to happen in the future, but looking backwards, we're looking at returns hundreds of percentage points a year, thousands in some cases, versus, that downside volatility, which does exist. But, typically this is attractive as an asset class because there has been a lot more upside. And I think you could say that of a lot of equities as well, but a lot more upside than downside, at least historically.
Would you say that this is all, or a large contributing factor is just kind of this whole crypto week narrative that has been in the news the last few weeks, or?
Yeah, I think to some extent that definitely helps when you have an evolving and positive kind of regulatory environment or positive developments on that front. So you've got the Genius Act, which was passed into law. That's the stablecoin legislation. You've got the Clarity Act, which is going to look at what role does the CFTC play in terms of regulation, and the SEC. How is that defined? You have the anti-CBDC, central bank digital currency, kind of privacy act as well. But, the big pieces to this are the Genius Act and then the Clarity Act and that market structure that we should get, or kind of the rules around that as a result. So I think that definitely helps. But you're seeing large institutional participation, big flows into Bitcoin ETFs, into Ethereum ETFs. Presumably, if you get other ETFs, Solana, and a few other larger market cap tokens, I think you will see that. You probably see some flows into those over time. You likely get staking for the ETFs, so that should further kind of incite some capital inflows, I would imagine. But you're also seeing these treasury companies spin up, where now we have companies that are via SPAC, are going public, and their sole initiative is to make money through, I'll call it Ethereum-based on-chain activities.
What's the big one right now?
The big one that just launched on the Ethereum side is DYNX.
Okay.
So let me see if we have the, and I think it just went
Because I know Nick Batista was talking to me about one on last Thursday's show with the boys, and I know you were on with them today.
Well, I believe there's SBET. There's a few other treasury companies around Bitcoin, around BitTensor. Tau is the symbol there. But Dynamics Corp, DYNX, I think if I can find the symbol, it should be trading. I want to say it was supposed to go live today. ETHM. This is the Ether machine.
Ether machine.
Yeah, so I don't have that symbol here when I'm looking at the Tasty Trade platform, but I do have DYNX, Dynamics Corp, which I think was the SPAC, up 17% today. But you've got these companies that are just buying cryptocurrency, putting it on the balance sheet, looking to participate more in those respective ecosystems, on-chain, generate yield via activities. Maybe this is a big kind of red flag. I don't know. I think it's still pretty early, but this is driving activity.
Yeah, definitely.
In that sense. And, you're also in a market environment where, look, the S&P is at an all-time high.
Yeah.
The NASDAQ, tech stocks, things are trading very well in this environment. We've talked about how it's an environment where there's likely, an inflection higher in terms of the rate of change of inflation. Maybe you get the growth, maybe you don't, but you've seen a bid for energy. You've seen a bid for energy companies. You've seen a bid for, inflation like proxies, gold, copper, Bitcoin falls into that category. So I don't think it's any surprise that in this macro environment, crypto is doing well. It's an environment in which you would suspect that it would. And you're now starting to see that flow into a lot of these other alts or smaller market cap tokens.
Speaking of the ETFs, have you been doing anything within them that you've been posting on the follow feed? I have not stalked anybody on the follow feed lately, but I haven't.
Yeah, I haven't posted any options trades there. I've just been taking some flyers.
Sure.
Maybe I should post them, but just buying, the 30 strike calls in ETH with a couple days to go. At times I've been trying to run the wheel strategy in IBIT, but I've never been assigned the shares on the downside. We've been in a pretty bullish market environment. So you sell the puts, they expire worthless, or you take them off for a couple pennies. Haven't been in a situation, maybe once, where I've rolled, but haven't taken assignment of the stock. So haven't sold, or the ETF, haven't sold any calls against it. But those trades have worked, and even though, and I'll just jump over to our volatility dashboard really quickly, even though you have very low implied vol, right? Here's the Bitcoin DVOL. This is from the Deribit Options Exchange, but Bitcoin implied volatility 30-day basis. Let's say it's right around 40%.
Sure.
Still gives you an IV rank that's close to zero. But when you look at that against 30-day realized vol, you have a 40% premium in there. Relatively speaking, the options are cheap, but there is still risk premium. There's still volatility risk premium in there to the tune of about 40%. So you've been able to get paid as long as that volatility continues to trend lower. I think at some point it goes higher, but it's been working. ETH, on the other hand, still have a premium in there, but implied volatility is getting a little bit more expensive.
Yeah. What do you feel like would be, you don't have a crystal ball, but what do you think would be kind of the biggest catalysts for a shift in any of the performance, let's just say by the end of summer? Would it be just a change regulatorily?
In terms of accelerating us to the upside or downside risks?
Either one. Yeah. What are your kind of...
I think the downside, let's start with the downside risk. I mean, in my opinion here, the downside risk is the macro environment, the backdrop. We've definitely seen at times heightened geopolitical risk here over the spring and summer. We've seen correlations go to 1. We've seen kind of these volatility explosions that seemingly come out of nowhere. And crypto is not immune to that. Correlations go to 1. You see a very strong inverse correlation between, let's say, Bitcoin and the VIX. I think that's probably the biggest risk here right now in the short to intermediate term, is that you just get into a macro environment that slows down rate of change of growth, rate of change of inflation from a macro perspective, across the economy. You just start to see that slow down. That's where you get the recession fears, the calls for that. It could be coming at some point. I just don't see that, on the immediate kind of horizon.
Sure.
But you'd see that reflected in other parts of the market. You'd see that in equities. You'd see that on a sector basis, factor basis as well. So I think that's the kind of bigger downside risk just immediately.
Yeah. In which case, like you're saying, if you just have a portfolio in general, you got to stay small. You got to stay on top of it.
Yeah, I think the larger kind of upside catalyst, though, continue to just be the liquidity profile in the market. So you've got rates still about 4%. Presumably they come down over time. Now we have an upcoming FOMC meeting here, an announcement, and it looks like today there's no change expected in terms of the Fed funds rate. But I think if you see rates lower over time, you have looser kind of financial conditions or more conducive financial conditions, global liquidity. If you track that, there's some charts going around on X, seems to imply that you're going to get higher crypto prices because the backdrop has been pretty positive from a liquidity perspective. And I think, in this market environment, as long as you've got that as your backdrop and you continue to get regulatory clarity, you get that FOMO bid, price kind of feeds on itself in this reflexive nature. So if you take out some levels, that's the catalyst itself. Let's say that ETH goes to a new all-time high, breaks above 4.45, and now, boom, you could see a short squeeze up into 5K, if not higher.
And I'll be like, damn it.
Yeah. 3.8 didn't look so expensive at that point. But yeah, I just think that this is something that, in terms of where we are in the cycle, it gets a little bit more attention. It plays out in a similar fashion to what we've seen previously. My advice to everybody is to just have a number in your head. If you own a lot of crypto or you were buying back in April, it's tough not to be greedy in a market that moves as quickly to the upside. But you just kind of look at it as if, hey, I made a bunch of money. This is a number where I can go and do this thing in the real world with it. Maybe that is how you approach it.
Yeah, I think we've all been, hypnotized by the parabolic behavior of any, whether it's crypto, whether it's the random thing Nick got me into the other day, the company that made the dire wolves. The chart's just going like this.
Is that wolf? I see some mentions of that in the chat.
Oh, maybe. I don't know. CRSP, I think, is the CRISPR lab.
CRISPR, that's the gene editing technology.
I think so, yeah.
Okay, that's back at the forefront. I remember back in 2018, 2019.
Yeah.
ARK Invest, that was all front and center.
Right, exactly. But we've all been wooed by looking at those charts where you just see beautiful green candles every single day. But I think, to your point, you need to kind of have a number and hopefully have a little bit of conviction that you stick to it, and or at least soften your position and then kind of see how things go.
Yeah, absolutely. It's never a straight line. Sometimes we forget that, but it's important to remind yourself of it.
Well, say
the market will.
Yeah. And okay, so we got 5 minutes left. So say that I do actually have some, I want to actually start to participate. Maybe I don't have any just
Maybe you have stable coins.
Maybe I have stable coins that
and you want to
put
deposit them, maybe?
Yeah. How do I do it?
Let's take a look at that. New feature just launched last Thursday. I suppose officially launched here today. We are super excited about this. The development team and everybody at the business has been hard at work for the last couple of months to deliver, Katie, stablecoin funding. If we can jump into our platform.
Stablecoin summer, so hot right now. Brett,
right.
Summer's so over.
Stablecoin summer.
Charlie XCX who?
Right. If you have crypto enabled and you have crypto transfers enabled on your account, you can deposit 4 different stablecoins, one of 4 different stablecoins across, I believe, about 9 different blockchain networks. And you can do that by jumping over here to Manage, go to My Money, and then go to Deposits. And when you do that, you'll see some of those old, historic ways of moving money, such as a bank transfer, a check deposit. I wouldn't even know where to start there, so I can't help you.
Tin can with string?
We might have that if you scroll down. Wire transfer, and then here in 2025, what I think is going to ultimately win out, a superior funding mechanism, and just following the Genius Act being signed into law, stablecoin deposits. So if you click on this, I'll run you through it. You've got to have your margin account or your crypto-enabled account that has transfers enabled on it.
Okay.
Then you click Start Deposit. You get this nice little modal that pops up. And I'm going to get my phone out too. You're not going to be able to see this, but this is where I'll do this off screen. And you get this deposit. You're going to be depositing through our cryptocurrency service provider. That's Zero Hash, as everybody knows. Click Continue. Here are the 4 different stablecoins that are supported. I would venture to say that we probably will support more over time. But USDC for US domiciled accounts is the most popular. PayPal has a stable coin. So if you have a PayPal account and you want to acquire PYUSD, you can use that as a funding source. So this is a little bit of a workaround, given that you can't fund yet with a debit card. And for a lot of people that are outside the US, this is a great way to fund your account using a stable coin if you have access to it, whether that's through a crypto exchange or another financial service provider. Also have Ripple, Ripple Ledger, US dollar, and then US dollar Tether, which everybody's familiar with. That's about 60% of the total market cap of stable coins, which is now up to 260 billion, Katie. We were quoting 250 billion just a week ago.
Jeez, Louie.
Or 2 weeks ago. So I've got USDC, and I have some USDC on Base. Base is an Ethereum L2. So is Arbitrum, Optimism, Polygon's a scaling solution. A lot of different blockchain networks here that support Base, Solana as well. Whatever network you have the stablecoin on, you need to select here. So I've got USDC. I've got to confirm I'm sending it on the Base network. Continue. Get a little disclaimer here. Minimum deposit amount of $1. Max right now is $500,000. I will be sending slightly more than $1 and less than $500,000. So I have my wallet open on my phone. I've got my USDC here. And in any wallet, it's all pretty much the same. You're going to go and you're going to get that address. And here you can either copy the address, so you got the deposit address at the bottom, or you can just scan it with your wallet. I have scanned it. And now I'm going to send $10 over here. Well, $11. It'll be a minimum fee, I believe, of $1. It's 30 basis point fee on the notional with a minimum of $1.
Not too shabby.
Well, depending on where you're at and what you've used previously, certainly again with transfers outside the U.S., you got the currency conversion, you have a time frame associated with that as well, so it could be a little bit more expensive or some friction there. But let's do that, and I'm going to send it. I'm sending it right now through my wallet, and we should see this pop up here in just a second. We'll give it a moment. But what this is going to do is, as soon as it's registered at the address on chain, this will go and you can see it'll shift to change the view. So deposit successful, you receive an email confirming that, blah, blah, blah. And then I'm going to just jump out of here and close this modal. And then we'll be able to see this in a couple different places. If I just look at my one-time deposits, here we are, 721. There's my $10 that's made it in there. If I go back over to the platform, I look at the history here, and you can see, let me just refresh this so it just pulls in the new updated history data here. There's our digital asset fund conversion deposit, AKA stablecoin deposit, $10 immediately available. What I love about this, Katie, is if it's Saturday and I don't know, there's a big carry trade unwind or something of that nature, and there's going to be some volatility on Sunday night when the market opens, or really at any point in time, and you don't want to wait for that ACH or even that wire transfer, which I think a lot of people do believe is like instant, and it's not. It also has a $35 charge for most banks associated with it, somewhere around there. But if you don't want to do that and you want those funds available immediately, this is 24/7. Obviously, you have to have stable coins, so you need to get those from someplace. We do have stablecoin withdrawals coming soon, hopefully in the next few weeks. But if you have stablecoin, you can deposit it now through Zero Hash at Tasty Trade, and those funds are money good, ready to go, buying power available. You can trade on it as soon as it's deposited, which is 24/7 instant.
Sold. Love it.
Yeah, I've been using this more often. I have some stable coins, and it's a good way to fund.
Yeah. And like you're saying, I mean, not like I literally just watched you do that in like 3 minutes. So if we're talking like jumping and striking where the opportunities are and when they're hot, great way to do so.
Absolutely.
And maybe if you're not even ready to do that yet, you can still enable.
Yeah, that's a great point. And if we jump back over there really quickly before we wrap up, if you do not have cryptocurrency enabled on your account. Now, you have to have an eligible account, which means you need a individual cash or margin account. And we're working on adding this to more accounts soon, more account types. But if you have an individual cash or margin account, you can enable cryptocurrency trading on it depending on where you live. There are certain regions that Zero Hash is not yet registered to do business in, but maybe is working on it. That said, if you're in the US, for example, you can enable cryptocurrency trading on your account, enable crypto, and then you can enable crypto transfers, just re-verify your identity, add 2FA for security purposes on the account, and you can do that all here in trading preferences, and you'll see that I've already got that enabled. This is also where you go to enable futures intraday margin, all the great features you want to add to your account, all the enhancements, I suppose. You can do that right here. But again, enabling crypto through the trading preferences on the web, or you can do that on the mobile app. And you can also transfer stable coins on mobile too. This is on both web and mobile trading platforms.
Beautiful. Love it.
Awesome.
Don't even have to leave your preferred device.
Yeah. Wherever trade on the go, as we like to say, right?
Yeah, I love it. I think this is great. You know, like you said, there's a lot more coming in the crypto space on Tasty Trade. So this is just one of those other ways. Like you said, definitely a less friction-heavy process than some of the other funding rails that are out there.
It's pretty cool to see it almost instantly. You just pop up there. You have the buying power ready to go.
Yeah, love it. You heard it here first.
Well, Katie, thanks for coming on the show. That's going to do it for our show tonight. We will be back. I will be back. Well, actually, no, I won't be back on Wednesday. I'm out of the office. Dan and Shelly will be back here with you. So tune in and show them some love on Wednesday for the Tasty Crypto Show. But I'll be back next Monday.
Beautiful.
Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.